Hi, ladies and gentlemen. Good evening. Today is the 13th of October and the Wednesday before the expiry. Despite what everything would suggest, despite whatever global cues, despite whatever happens, really, we are in a one-way track. We are in a hyper bull market, and the sector rotation is real. So you see first IT killing it, and then you see IT taking a pause and a dip, and immediately taken over by banks and autos, and you have different sectors. Now you have metals, different sectors just moving in one direction. Everything just plans to go up. Selling a call option or buying a put option for anything more than just a small intraday trade maybe is an absolute crime in this market. So all that being the case, today decided to trade intraday because it would be a good risk to reward. First of all, was not expecting such a strong gap up to sustain. Neither was the market. That was very evident with the bias in pricing that was there at the onset. Tried to be a little safe with the upside, but even then, with the kind of a rigorous and strong up move that came, there was really not too much that could be done. If you were short calls, it would have been difficult to manage. And given that there is so many new longs being built up, the OTM put options as well are not going down in price. So you're seeing this kind of an IV spike behavior because there is demand, there's purchasing of those put options for hedging purpose. So all this being considered, I finally managed to close down slightly today. And one thing that I have going for me is that I'm keeping my position size very manageable so that I'm able to stay in a trade for longer and manage it for longer rather than having a larger sizing and having very strict management, because the way the market is moving, it is just not easy to manage a non-directional trade for intraday. Now, that being the case, at the same time, I have to also put across that I think one thing that I don't have going for me is you always will have personal biases. You will have slight biases of how overbought the market is, and you would either expect like a consolidation or some kind of at least a pullback, a minor pullback at some point. And I also have the same kind of mentality, which is why having a neutral to bullish position invariably is giving me slight jitters. And I think that bias, while it's not affecting my trading directly, it's something I have to work on and something I have to be cognizant of. That okay, I have this bias, so like don't let it take over. I mean, that's exactly why I haven't taken any short positions on the market at any point of time, because this is not the right time to short. The time to short will come, it's just not now. And I didn't mind being bullish for the longest time, but at this point it is just not making sense anymore. We just keep going higher and higher. It's the same thing always. Consolidate in a 500 point range for a while. At least previously we used to do that. We used to consolidate in a 500 point range and then we break out. Now it's just we're cutting through the 500s like they mean absolutely nothing. Today itself, I mean, first of all, we moved from 17,870 to 18,000 in probably the last 1 hour of trading yesterday. After that, we had a tremendous gap up, even though US markets closed in the red, futures were in the red, we had a gap up. We sustained that gap up, and from that gap up, I've made another continued 100-point up move. So it's been really a one directional move, and it's been difficult to manage, I'm sure. But at the same time, at tricky times like this, when you're not able to read the market properly, when you're not able to really get your trades to work, the best thing to do is take as little risk as possible. Keep your sizing low. Try and take trades, see if they work out. If they don't work out, get out of them, before it's too late. And don't bother in a particular situation when market is going through a certain phase, and the phases will change month on month, sometimes once in a quarter. And you're not able to trade that particular period, take it light. So that's what I'm going to say. And thank you so much for watching. I hope you had a good trading day, and I will catch you tomorrow for the expiry, where the plan also is to be very risk off. Expiry, I am going to work with a very tight risk management and keep a position that has an extremely high probability of profit. Even if I don't make any return, it's fine. That's more or less the plan. So thank you so much for watching. I'll catch you later. Bye bye.
Want to meet like-minded traders and discuss option strategies, adjustments and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Good morning, ladies and gentlemen. The pre-market has just settled, and going over what is happening. Tata Motors is looking to open its circuit because of the news of investment of almost $1 billion by a fund into their EV segment. And more or less, that's what is going to contribute a lot to the Nifty. Across the bat as well, there is quite a bit of positivity. And there are only three companies showing mildly in the red. Everything else is in the green. So we're opening at an all-time high. From where the pre-market close is suggesting 18,100, I'm expecting it to actually pull down till about 1850 because that's what the Singapore futures are suggesting. So about 1850, 1860, a 30-point dip should be there. And more or less my calls at 18,100, this will be a little bit of threat because of this gap up. There should be enough credit from the put side to compensate. And the plan anyway is to convert this positional trade into an intraday trade for today and close the position by close. So as far as the expiry is concerned, I would think 17,800 and 18,200 should be firm boundaries. Now, depending on what kind of premium is available for this spread, I will restructure my Nifty position so that I just have to carry it through the day and will have it closed by the close. And yeah, immense positivity is what the market is opening with, despite having weaker global cues, despite institutional selling, and Asian markets are slightly in the green today, but US futures continue to remain in the red. But yeah, Bank Nifty looking very strong from these levels. So we'll keep you posted. As of now, the time is 9:10, and yeah, we'll let you know. Okay, we've just opened, and despite the very strong gap up, it hasn't really affected my position very much. Basically, I had to give up a couple of points on the 18,100 call. I booked those and moved all of my calls to 18,200 and have moved up my puts to 17,850, and I have added quantity for the intraday sizing, which will be about 16,000, which should be manageable regardless of what move happens. Now, if we convincingly take out 18,100 and hold above it, these will be trading at something like 22, 23. Roughly at the point when they are taking out 23, I will be squaring them off and rolling them higher. That is the plan for today. So if these calls expand to about 23 plus, then I will be squaring them off and rolling it higher. The skew of options pricing is such that put options have considerable value at lower levels, whereas what is technically only 130 points away call option is trading for 18. What is more than 200 points away, the 17,850 put is trading for around about the same price. So a little bit of a bias in the market that the higher levels should get defended, but if that bias goes wrong, then there could be tremendous short covering. So that is something to watch out for. And the plan is to get out of this before it is expanding too much. Now, on the other side, I also have one technical problem, which is why I'll be making some baskets for a panic exit. I've upgraded to Windows 11, and that is creating a little bit of a lag with the tool that I use, Console Coder, and that might end up being a problem. So for just in case things go wrong, a panic exit basket order I will set up and keep ready. Bank Nifty after the gap up is being sold into a little bit, but more or less not to a large extent. And everything else more or less is holding on to the gap up. So will be interesting to see if there's a continued upside from here. We'll keep you posted. Okay, so something that's obvious from the open, but something that has also been reducing from the open is the skew in put options versus call options. You can see we are just at the brink of testing 18,100, but there is an immense difference between the 18,100 put option and 18,100 call option. Whereas one is trading at 80 plus, one is trading at 56. So the idea is if we do head above 18,100, then everyone who has this bias of, okay, we've already gapped up so much, the further upside is going to be limited, higher chance of a rejection, that bias will have to change. And what that will do is that will completely restructure some of the pricing between put options and call options. For example, right now in my Nifty position, what I've done, I've preemptively taken off about 2/3 of the call option and at 18,200 and moved it to 18,250. Reason for this is right now, let's consider 18,100 as at the money. 250 points away, this put option is trading for 18. There has been a little bit of an IV spike, wherein put options have not given up value into the up move, and call options have gained. The entire position itself has gained with this 17,850 and 18,200. And more or less, what is going to happen in case there's an up move, eventually this put option will fall off. But meanwhile, this call option will explode first. So to deal with that, ideally, I want to space a little bit further away. This 100 rupees away, 100 points away call option is trading for 19. This 250 points away put option is trading for 18. So that shows you the bias that the market has, that there is a higher chance for a rejection as far as what people are willing to pay for higher levels. Right now, it is not very high. So that being the case, in case that view goes wrong and we hold the higher levels and we continue to head higher, that's exactly when you're set up perfectly to have a burst in call options. And I don't want to deal with that, which is why I'm just going to move away some of my call options to 18,250. The other option would be to move my put options to 17,900. But in case there's a quick 60-70 point slide, those put options are going to blow up, and that will not sit very well with me. So that being the case, once again, I've just taken off a little bit of the risk on the call side. And we'll wait and see. If this expands to 23, then I will remove all of it. I took it out at the price of about 21. And at 23, the remaining 1/3 quantity I will remove. Now, in case we head lower and start testing 18,000, that will actually work out really well for me, because call options will absolutely crash, while put options should not gain that much. But once again, there, in case we do have a down move, the idea will be to roll the puts lower as well. So as of now, not the best start, but so far so good. And we have an entire Wednesday to go. Most likely, if we close somewhere close to where we are right now on this position, I can easily benefit about, if nothing else, 10 points. So we'll keep you posted. Also, as far as the open interest is concerned, there is huge amount of puts written now at 18,000, which becomes like a sacrosanct exit situation. There's also puts written at 1850 and a lot of straddle positions at 18,100, with more puts being written. And a lot of this will be to protect against existing call shorts that are already there in the system. People who are short calls, they would be very afraid and having to write straddles at 18,100, 18,150, 18,200. So some amount of profit booking on people who have shorted this 18,250. But all the way till 18,200 now has sort of opened up. And yeah, given that there is a bias in the premiums, it might lead to all kinds of weird restructuring into an up move, which is why more important to be aware of what is happening on these calls. Also, quickly going over the Reliance position. As of now, this position is giving me a 70,000 loss, but my upper break-even extends all the way another 130 points from here. So I'm very comfortable in this, and this has to be looked in conjunction with this particular trade, because I have to also consider that I have shares. Of course, I'll not be booking profit on these shares, but it has to be looked at in conjunction with this, right? So, and a continued up move is not too much of a problem. Technically, as an overall position on Reliance, cash plus F&O, I will be gaining, right? So that is something I have to keep in mind. So until we take out about 2,730, 740 like that, I won't have too much of a problem in dealing with this position. Into the gap up, people were expecting some amount of selling, at least a quick dip of at least 50-60 points. That didn't really happen. I mean, the initial dip till 1860 came, obviously, to correct against the futures, but after that, nothing, which is why people would be a little worried, and that's why there can be an explosion on these call options. Also, just another small trade against my holdings of SBI. Now that SBI has a little bit of a run up till about around 500 will be a psychological mark. So for about 1,300 shares that I have, I will be selling one lot of this 1,500 and 20 call option for 5.85. This is just to collect a little additional premium against my shares. We'll keep you posted. As of now, the time is 9:45 and we have just held exactly where we've opened so far. Okay, so we started holding those higher levels, and that exact explosion that one would have thought has taken place. So you can kind of go over how initially the 18,100, when the spot was just 10 points below, the put option was trading at 84.85 and the call option was trading at 52.53. But now, just from holding above 1800, just a couple of points, an entire restructuring of call options, wherein you can see as well this 100 point away call option gained 10 rupees out of nowhere. So I restructured my trade quite quickly. So I got out at around 21 initially, and then at 24 and 26, and now have rolled my entire position into this 18,250 call option strike. And for my put option strike, it's the 17,900. My put option is more than 200 points away. My call option is 150 points away. This particular spread is trading at something like 35 now, and I'm expecting most likely by the close of today, it should end at under 20, and definitely possible to go as low as 15 if we end up closing between 18,050 and 18,100. So that is the idea here. Now, more or less, what I will be doing from here is, in case we have a rejection, because now I have moved my put options higher, in case we have a rejection, then I will once again be rolling down my put options. And the cool off from the call side should be enough to still benefit me. And in case we have a continued up move, then I'll have to see if I'll have to execute this order where I just take a risk off on my entire position. So basically, from where my mark to market is sitting on the intraday triangle, if I give up about 5 points, right? So up till 5 points is acceptable. At that point, I will just be squaring off the entire position and rolling super far away so that I can try and capture at least 4 or 5 points for the day. So that is more or less the plan. And so far, it has been interesting. We gapped up. Everybody had this bias that would get sold into at least a little bit. Did not happen. Straight continued up move. Metals are rocketing out of control. Nifty metal is by far the biggest performer. Even the broader market, mid caps are doing extremely well. And yeah, bank Nifty lately has been relatively much easier to trade. It has opened. It is very much flat. So not a lot happening on the bank Nifty front. Just the Nifty that's giving a little bit of a continued up move against the biases of people. But we'll keep you posted. It's just about 10 o'clock. We've got the entire day left to go. And with this position sizing, should be relatively easy to control the position. We'll keep you posted. Okay, so something super interesting is Tata Motors is almost at 500, up 18%. 25 points coming from Tata Motors alone. And the thing is, the option chain, if you look at October, November, or December for Tata Motors, the highest strike open is 485. So technically, the stock is trading at 3 strikes higher. And the at the money, even if somebody wants to trade, this is available only at 485. That's the highest strike that's open. So that's quite interesting. They'll have to open up a couple more strikes on this. But yeah, absolutely rocketed out of control with that investment coming in. So that being the case, we're holding at higher levels. And so far, what is happening is into the up move, there's a little bit of a IV spike. And puts are not really giving up much value. But it's a matter of time. There's no way that this can hold on to its value till the close. Either one has to give, or we have to make a big move. Until about 18,150 is taken out, these call options won't give me too much trouble. When 18,150 is taken out, these call options will start giving me trouble. And at that point, my idea will be to roll away first 1/3, 2/3, and then completely the position, maybe depending on how high we go, to 18,300. And meanwhile, this put option should give up. It will give up value at some point and cannot hold value till close. That would be very, very, very unlikely. So we'll keep you posted. As of now, 10:45, and the only thing that's happened is we gapped up. People were expecting at least a slight rejection, did not come. Short covering on the call side, and then we're holding at higher levels, and Tata Motors continues to head higher. Bank Nifty more or less flat from where it opened. Reliance slightly below where it opened, and IT slightly positive to a little bit bullish. Metals are super, super strong. Broader market, once again, very strong. Mid caps, everything is seeing buying. Like there's buying across everything. Okay, the time is 11:15. We pulled very close to 18,150, and basically there's no reason I would remain in this trade except for the fact that it's a Wednesday. So the risk to reward is in my favor immensely. So my risk appetite also should be a little bit higher. Right now, into an up move, there's absolutely no fall off in put premium. In fact, at one point, the put is also gaining, call is also gaining. But this kind of a situation on any day except for a Wednesday would be, okay, you know what, just cut the position kind of a thing. But given that it is a Wednesday and these have to lose value, and eventually whichever is out of the money has to go to zero, still makes it okay for me to hold on to this position. It's reached nowhere level the mark to market point also where I would like to take an exit. So that is not of too much concern. So as things stand at 11:15, still in the trade. So far, Bank Nifty has just held sideways. So Bank Nifty is holding beautifully, whereas the rest of Nifty is all the other contributors except for Reliance are on a steady uptrend. So the time is 11:45. There's been absolutely no change in the way things are structured. Finally, we're seeing one rejection candle. As I said, that just this one red candle coming in is completely crashing the call options. My puts are far enough away that they won't expand too immediately. But the reason put options, OTM put options especially, don't go down too much in this kind of an up move is because with this kind of an up move, the chance for a rejection, the potential move that a rejection can bring in can be quite large. Also, can't go off of day's history because today's day's history includes squaring off of some open positions which were booked in the morning. So what I'll have to look at is this particular position only, the 17,900 and 18,250. With that red candle taking out about 30 points, the calls have completely crashed. The puts haven't particularly expanded. If these start to go over 22, 23, that is when I would be a little concerned. As far as open interest is, so this is the particular red candle that absolutely smashed the calls. Not doing anything to the puts, so that is really helping my position. Calls gave up about 5.5 points, and puts have not even gained 1 point. But that'll be temporary. If we take support here, once again, the calls will regain a lot of their value. As far as open interest is concerned, tremendous shorting of the 18,000 put option since morning and 18,100 put option as well. See the kind of, I mean, this was barely at 10 lakh contracts, now at 50 lakh contracts on the 18,100 put option, and 18,000 from 30 lakh to 62 lakh. And more or less, the reason OTM put options don't go up is because when people take these kind of positions, they have to buy a lot of put options which are OTM to hedge that. And maximum call side open interest 18,200, 18,100. 18,100 was in the money for a while, but no real panic as such in unwinding of this position, which is why and people would have probably been okay to hold on to the 18,100 call option. Even from a price perspective, I don't think it would have spooked them out. And as of now, as things stand, finally this switch was trading at 34 for almost 1 hour plus, has now come down to 31. So that puts me in a better situation, and as long as we consolidate here, that would be great. If we continue to head higher this time, the calls won't gain as much as they did before, and puts will also probably start to give up money. In case we head down to about 18,050, break 18,050 on the downside, then I'll be squaring this off and rolling it lower to 17,850. That's the plan. Okay, something to note, the time is 12:04, and Reliance suddenly out of nowhere with volume building has made this big up move, pulling to about 2,700. And that what it has essentially done is, after this very strong rejection candle which looked to at least pull back for a little bit, completely negated. So completely got negated, and this had come from Bank Nifty, but this up move has come from Reliance, and that has sort of pulled us back where the calls have gained back value, but the puts have lost a little bit. So nothing to complain as such. From an intraday strangle perspective, now going back to my Reliance position, this is fine. Actually, best case scenario for me if we actually expire closer to 2,700 on Reliance. Of course, this will have a negative delta, and it will really start to hurt once we head above this 2730, 2740 range. But there's quite a lot of room. There's still about 40 points still there. So as of now, we'll not be doing anything to this. We'll keep you posted. We're at the halfway point, and so far it has been a very uncomfortable day. It's that atmosphere of, okay, what is going to happen? Nobody really seems to know is what the OI would suggest, which is why everyone's taking slightly safer bets and covering existing positions. Okay, it's almost like there's a script that has to play out. Basically, managed to exit the 18,250 call option before it expanded too much. So we started exiting at about 20 and went all the way up till about 23.5 at one point, and have moved it up to 18,300, which is 140 points away. And my put option continues to remain at 17,900 with about 13 points of credit. Now, after rolling also, there is this little bit of an expansion here, but more or less 20 points of credit in a 400 point triangle one day before expiry. Sorry, 25 points of credit. And yeah, if nothing else, we hold at some point and stop this relentless up move. This position can give up a good 8 to 10 points. So that's what I'm working with now. As a sacrosanct stop loss, if I lose another 3 points from here, I'll call it a day, because it's in a very uncomfortable position. Like, there is the data is super bullish because a lot of people have short positions, and they have obviously created these long positions to deal with the fact that they have short, so the short covering. But at the same time, how much further upside and how much further short covering is not too evident, because there is still a large amount of almost 45 lakh of 18100 calls which are now in the money, which are not getting covered to the extent that one would think. And after the initial up move came from Reliance, now it's Bank Nifty which is heading to the day's high. So it's been tricky all over, but the premiums far enough are all right enough to still hold on to this position. So we'll keep you posted. Time is about 12:30, and so far it has just been a relentless up move. We had one candle to take out stop losses on longs, and then right back up. Okay, so after rolling away my call options, one red candle has crashed the call options a little bit, and that has brought down the IV, wherein into the down move, obviously these puts won't gain too much. But the idea is, if this swing is taken out, this particular swing, then I will be squaring off these put options and rolling them to 17,850. So until there, I'm fine to keep my position as is. But once this particular low is taken out, then I will be squaring them off and rolling them down. It has been a little bit all over the place. Into the up move, puts didn't give up any value. Calls expanded immensely. This went up to 25 just about 2 candles back, and is now down to 16. And yeah, now if these puts do start to gain, and we break that particular low, I will be squaring them off and rolling them lower. But into the down move, because puts didn't really lose much value into the up move, they're not gaining too much into the down move so far. From a Nifty position perspective, currently this is down about 3 points change, so that's fine. And yeah, so far has been a very, very annoying day. Okay, so the kind of day it is basically it's a hyper bull day, and slightest of dips get immediately bought back. Mild dip, immediate buying back. Potential dip, immediate buying back. There is no way the market is even being allowed to dip, and it's coming from different parts each time, wherein now it's banks which are taking out the day's high, and Reliance as well, taking out 2,700. So it is coming from different pockets at different points of time. Everything is in the green. Everything is just headed up except for IT, right? So it's just IT which is sort of holding. And my idea more or less is, I currently on my Nifty position, I'm losing about 4 points plus. What I was hoping to gain was about 8 to 10 points. Now another 4 points if this particular position bleeds for whatever reason. I have my exit orders ready here, and I will be just calling it a day. Fortunately, I'm just trading much smaller quantities than what I generally trade. So this really doesn't affect on an account level P&L. It doesn't really make much of a difference. But I think it's been a good time to be cautious and trade smaller, because there's been no sliver of easy money to be made in this market. It's there never is, but it's been particularly difficult, especially for my style of operating. So yeah, about 4 points from here I'll take, and then I'll probably call it a day. My Reliance position is holding all right. My mark to market is not really fluctuating too much. It's holding between negative 65 to positive, negative 65 to negative 75. And more or less the up move is, I mean, at least till a certain level is hedged with my shares. So it's fine. I'm just going to keep it. Them. It's immense bullish sentiment. It doesn't make sense to me. I think one of the problems I'm facing, one of the difficulties I'm having, is until a certain point, until like about 17,000 was hit on the index, I didn't mind keeping a neutral to fairly bullish stance because of the whole liquidity story playing out and whatnot. But now, given things where the market is, it just I'm not comfortable even being neutral. I invariably notice that I tend to have a bearish bias, especially around psychological levels. I tend to have a bearish bias, and that's clearly not what the charts are saying. Charts are hyper bullish, so this it's just that, do you want to be bullish when everyone is bullish? It kind of works like that. So in a way, fear is at the peak, and not just for me. I know this for a lot of people. At these levels on the market, people are very afraid. That greed isn't there. That okay, it's going to go even further up. People are just like, okay, how has it gone up so much? It has to come back down at some point. And of course, I will always be rational. Is the reason I'm not shorting the market. I'm not selling off my holdings, because at different points I would have had thoughts that okay, maybe I should sell my holdings, and instead I sell some call options. That too, not against all my holdings, just a few of them, and invariably all those call options get burnt, and I have to manage those positions. So yeah, I'm going off on a bit of a rant, but basically this up move is unbelievable. I mean, nobody would have expected 2 days back that we would be trading where we are when we were trading below 17,900. Nobody would have expected 18,000 to get taken out with the vigor that it has. There hasn't been any particular trigger. What you've had one TCS result, which has not come so good, but yeah, apart from that, I guess the Tata Motors news and the Reliance news was not really something anticipated. But yeah, regardless. So as of now, this position is trading for about 23. And if it goes to about 25, 26, 27, I will just be exiting my position in tranches and not be trading further today. Mostly because I'm not able to make complete sense of what's happening. Yes, we're seeing short covering, but you would think that after short covering is done, there wouldn't be that many new longs and that much fresh buying to push the market higher. But there's a mix of both. There are a lot of longs being created, there's shorts being covered at the same time, and there is fresh buying taking place clearly for this to be happening. So we'll keep you posted. As of now, the time is 1 o'clock, and I have my stop loss and exit. So just sitting by as the day plays out. We'll keep you posted. Okay, this is reaching a point where I just don't want to stay in this trade anymore. Got 1.5 hours left to go to close. And while very realistically, this position might be in a much better situation by the close, I just don't want to deal with this up move anymore. So I will just be taking off my entire position. I'll come back and fight another day. Doesn't have to be today. Simply because all said and done, there is really not too much that I can gain versus what I lose if there is another 20-30 point up move from here. There's a 20-30 point up move from here. These calls will rocket to 20. And there's really nothing I'm going to get from the put side. And I'm not going to move up my puts after having run up this much. So it just doesn't make sense for me. All said and done, if I'd done nothing today, I would have basically closed at the same mark to market. And the loss that is booked on the Nifty position is 1.15 lakh. So all of the Nifty positions put together, which is fine. I mean, it's a 0.25% type situation. It's a 0.2% on account to value situation, so it really doesn't matter. And yeah, the Reliance position looking perfectly all right. Had I not made any adjustments at the point when my initial call went in the money, I would be much worse off than what it is now. Despite the up move, there's a little bit of a cooling in the options pricing, so due to slight fall in IV. I'll just see if it's a liquidity thing. No, so this is liquid. Yeah, and this is liquid as well. So it's not a liquidity thing, and yeah, a little bit of cooling in Reliance IV despite the up move. That's good. It means that the potential continued upside should also be limited. So all said and done, yeah, good call to get out, because there's going to be this kind of an explosion in the call options once we just start testing that 18,200. Until then, people will wait, and at that point, it'll be pretty messed up. So anyway, not a day I could deal with. One, because I had a slightly bearish bias from the gap up. And after that, just this continued up move with the deep underpricing of risk on the calls would completely do this. So can't do too much about it. And yeah, thank you so much for watching. I will catch you tomorrow for the expiry. I'll see how the expiry looks, and most likely will not be trading the expiry very aggressively. I will try to be as risk off as possible and collect what would be a super safe trade and look for opportunities into the day itself. But yeah. Hello, everybody. Thank you so much for watching. I hope you have a good trading day. I hope you're on the long side of this market. I hope you're long call options and doing really well. So I will catch you later. Take care.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram, and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab, so do not forget to check that from time to time.